When you think about the world of coffee, it's pretty hard not to picture a giant like Starbucks, right? They seem, well, unbeatable. But what does it really take for a new challenger to brew up a storm and go head to head with the Titans? Today, we're going to break down the playbook of BlackRock Coffee Bar, a super fast-growing competitor that has Wall Street analysts watching very, very closely. So to really get what's at stake here, you've got to understand the sheer scale we're talking about. The U.S. non-alcoholic beverage market is, get this, a colossal $255 billion industry. That's as of the end of 2024. This isn't just a market, it's a massive battlefield for every single dollar you spend on drinks. And right in the middle of this packed, super competitive world, BlackRock Coffee Bar is making its big move. They're trying to carve out their own piece of the pie with a strategy that's all about speed, culture, and a product lineup that's, well, a little different. So how are they going to pull it off? In this explainer, we're going to survey the coffee battlefield first, then we'll dive right into BlackRock's master plan for expansion and what analysts are calling their secret sauce. After that, we'll pit them head-to-head against the biggest names in the game before we get to the final verdict. What's the ultimate bet on BlackRock's future? Okay, first up, Section 1, a new contender. Look, to understand how a challenger like this can even have a shot, we first need to get the lay of the land. This isn't just about your morning cup of joe. It's a fast-moving, rapidly changing industry. So the U.S. coffee market, we're talking about a nearly $56 billion arena. And we're all drinking more of it than ever. 66% of Americans had coffee just yesterday. But here's the real kicker, the thing you gotta pay attention to. What are people actually drinking? The real growth isn't in your standard black coffee. Nope. It's all happening in specialty coffee. And even more specifically, in drinks that aren't espresso-based, like cold brew and all those frozen drinks. That is the exact wave that BlackRock is trying to ride. So, BlackRock sees the wave coming. But how do they actually plan to catch it? Well, that brings us to their expansion blueprint. Let's pop the hood and take a look at the engine that's driving all this growth. Okay, listen, BlackRock isn't just growing, it's exploding. As you can see on this timeline, they grew their store count by over 22% in 2024 alone. They're on track for another 20% plus this year. And they are not hitting the brakes. They have this incredibly ambitious goal of over 1,000 stores by 2035. This isn't a slow simmer, it's a full-on rolling boil. And look, this isn't just throwing darts at a map. This is super targeted. This chart shows their strategy perfectly. By 2035, more than half of their stores are planned to be in just 2 states, California and Texas. They're placing huge calculated bets on these big, high-growth markets where they think their model can absolutely crush it. So how in the world do you fuel that kind of insane expansion without completely burning out? That question brings us to Section 3, BlackRock's secret sauce. Analysts keep pointing to these 2 key internal things that really truly set them apart. Now get this. This statistic it's really something. In an industry that is notorious for people quitting, BlackRock has built this incredible culture of opportunity. By promoting pretty much exclusively from within, they're creating a crystal clear career path for their employees. And that is an absolute game changer for keeping your best people around. And if you want proof, look no further. The numbers tell the whole story. For baristas, BlackRock's turnover rate is 77%. Versus a crazy high industry average of 115%. And for shift leads, the gap is even wider, just 26% at BlackRock compared to 59% everywhere else. This isn't just some feel-good metric. This is a direct competitive advantage. It impacts their costs, their quality, and the experience you get as a customer every single day. Okay, quick timeout. We need to define a key term you're going to hear a lot, same-store sales, or SSS. It's basically the best way to see how healthy the existing stores are, because it ignores all the new openings. Just think of it like this. It's a report card for your existing locations. Super simple, right? All right, so how does BlackRock make sure it gets an A+ on that report card? Well, they're basically pulling 4 main levers. First, they're constantly dropping new and innovative products. Second, they've set themselves apart with things like their fuel energy drinks, which are a massive hit, by the way, making up 22% of all their sales. And finally, they're just pouring money into marketing and a digital loyalty program that is getting some serious traction. All right, this is where it gets really interesting. Section 4, the clash of the titans. We know BlackRock's internal strategy is strong, but how does it actually hold up when you put them side by side with the biggest players in the game. Okay, so this right here, this reveals their single biggest challenge, brand awareness. In the markets where they already exist, BlackRock or BRCB is only known by about 47% of people. That is nothing compared to their main rival, Dutch Bros, that's ticker BROS at 83%, and of course, Starbucks, SBUX, at a mind-boggling 97%. They have a serious mountain to climb here. But check this out. Here's where things get wild. Even though their overall brand awareness is low, their new loyalty program is an absolute smash hit. In just about a year, 64% of all their sales are coming from loyalty members. That is shockingly close to Dutch Bros, whose program has been around for years. It tells you one thing loud and clear. Once customers actually find them, they are hooked. All right, we've laid out the strengths, the weaknesses, the whole picture. So that brings us to the big question, the final verdict. How do the financial analysts on Wall Street weigh all this? What's the actual bet on BlackRock's future? So here's the bottom line. What this all boils down to is one thing, execution. Specifically, that same-store sales number we just talked about. In the base case, what analysts expect, they see a 36% upside to the stock if SSS grows at 4.5%. But just look at these potential swings. If they can kick it into high gear and hit 5.5% growth, the stock could jump 67%. But if they stumble and that growth drops to 3%, you could be looking at a 19% downside. Okay, let's wrap this all up. What are the big takeaways here? 1. BlackRock is all about aggressive, targeted growth. 2. Their superpower is a people-first culture that just demolishes the industry average for employee turnover. 3, their biggest challenge is closing that huge brand awareness gap, but their digital loyalty is a huge bright spot. And 4, for investors, it's a calculated risk with some serious potential, but it all hangs on their ability to keep those existing stores growing strong. And really, that leaves us with the one massive question hanging over everything. BlackRock has the high-octane fuel for this incredible expansion. But in the race to become the next coffee giant, the ultimate test, the real question is whether their unique, people-first culture can stop the entire engine from burning out.